Turn your microphones on.
Testing, 1, 2, 3. Jim, turn yours off. Oh. There we go.
Well, yeah.
Mr. Chair.
Yeah, so thank you, Madam Governance Advisor. Well, welcome to everybody who may be in council and who may be watching online. We just had a slight delay there, getting our microphones made live so we can speak. So we're now in business. So welcome you all to the Performance Audit and Risk Committee meeting on the 23rd of August 2022. And are there any apologies for absence? Doesn't appear to be. So no apologies. Declarations of interest. Everybody's interested in the proceedings, so we'll carry on from there. Right, confirmation of the previous meeting minutes. Councillor Hopkins, Councillor Holding seconded. And all in favour, please say aye. That's very good. Thank you. So confirm those. Thank you. Memorandum reports. The first one on page 13 of our agenda is the financial report for the year for the 2021-22 financial year. So Mr. Hope, Mr. Wells are both here to speak to that. Mr. Hope.
Thank you, Chair. So it's a relatively brief report as we've just started the new financial year. We do not produce a period one financial report, really because the information included in it is very hard to interpret. And clearly we shouldn't have too much variance to budget after 1 month. So that's why that's not included. I think really before I turn over to Mr. Wells, just like to move to page 19. Where we had the chart of the our net funds position. So that's a matter that's come up in previous committee meetings about we were disclosing the debt amount, but then really not showing our net position, which was a lot more favourable. So I think that chart does show that we're still overall a positive net investor. I then posed the question to Mr. Wells. Well, clearly the money has gone somewhere. Probably a good idea to try and explain briefly where it has been gone, where it's been utilised, so that the cash flow summary below that chart sort of just tries to outline that. It is quite a close relationship to the spend in Three Waters, certainly from the 18 to 21 period. And that's not too much of a surprise given the amount of new spend that we've had, particularly in things like the Hamnack pipeline. It is a little different in 22 because a lot of that 9 million was funded from the tranche 1 funding from the Crown. It really was bumped up by the increased, taking on the loan from Waitaki District Health Services to Observatory Village. But, we're still in a positive position. That was sort of the main things that drew my attention. So over to Mr. Wells to make some further comment.
Thank you, Mr. Hope. Hopefully this is an explanation, self-explanatory report, and to help with your understanding of it and the accompanying Bancorp report, we've also provided a third attachment which takes a look at the more technical terms that the Bancorp report covers and puts them in hopefully layman's language. So really I'm happy to sit back and wait for your questions.
All right, thank you, Mr. Hope and Mr. Wells. And just a note of welcome, Mr. Simon Neal online. Welcome, Simon, to the meeting.
Thank you.
And so just on the first page, the commentary there, the first paragraph, probably Ian, you comment about the draft we provided for elected members information. I assume that'll be at the end of September. That's when the draft is due for the audit, to commence the audit. So I assume that's when the next draft will come, or the next first meeting after that will come to council.
It will come to probably the last meeting of this council, yes, because after that it will be the responsibility of this council, if they like what they see, to recommend the adoption to the incoming council.
Thank you, Mr. Wells. Yeah. Right, questions? Anybody on the report? Councillor Holding.
Thank you, Councillor Wilson. On page 18, could you just remind me what the 11 mil increase in borrowings will be into 2023? That 3 was project for. So I noted page on page 17, sorry. On your.
So we're talking about the additional, so at the bottom of page, page 17 lists out our LGFA borrowings, which at the end of the year came to $25 million plus accrued interest. Since that time, 4th of August, we have drawn down a further $4 million and also refinanced $4.5 million that came due on the 11th of August. So right now we have $29 million. The requirement for the 4 million additional borrowings was predicated largely because as a result of the new loan agreement with Observatory Village, there is no principal reduction received in June as would normally have been the case. And also the reduced dividend from Whitestone has affected our available cash. Plus you're right, expenditure on capital projects through Three Waters and things like the emergency works for roading are eroding our available cash. So that was the reason for that.
Thank you, Mr. Wells. And I think Councillor Holding's point, it was 29 million now, will increase to 38 million over the course of the 23 financial year. So there's another 9 million to be borrowed. So that's just what you said. It's for Three Waters and roading repairs.
It's for a large number of projects that we have underway. If council were to confirm the Sports and Events Centre, then council has a budgeted amount to put into that over the next 2 years or so. Yeah, it's just a combination of all of the budgets in the 2023 year, plus this morning you approved another $20 million of expenditure. We have to fund that from somewhere.
Indeed, Mr. Wells.
Mr. Chair, if I could just say, Mr. Wells said, you know, if we confirm the Sports and Event Centre, I think that's, you know, in parlance for the community, it's like we have confirmed that it's that there's been sufficient fundraising done by the trust, which allows us to get on with it. And then that's when our money will go into that. So just I don't want anyone thinking that it's not confirmed. Thank you.
Yeah, thank you, Mayor Kircher, for that clarification. Indeed, certainly. So, yeah, it's a matter when that money is going to be required from council, and because yes, it will have to be borrowed. And yeah, so just one question from me, Mr. Wells, on page 15. In Norwich North Harbour Irrigation Company Limited, principal repayments of at least 376,963 will be made in June. Doesn't say which year. That's, I assume that's June 23. I
think that should actually be made. It should be by June because, in fact, the agreement with Norwich requires quarterly reductions of principal. So, a word wrong there.
Right. So,
but also the reference to at least that sum.
Really? Oh, I cannot. Yeah.
If Norwich if Norwich were to sell further shares during the year, then council receives a share of those sales as well in reduction of the loan.
So sorry, Mr. Wells, I was slightly distracted there. So that will be made by June. So is that what it should be? So that would
so it should read will be made in the year ended June 23.
23.
I think
okay,
would be a better way of putting it.
Right. And Simon, you put your hand up. You're a very small dot on the screen in front of me. I can hardly see the yellow hand.
Okay,
There. So Simon,
I'm a small dot, but that's all right. I have maybe three things I want to would like to raise here. Firstly, Mr. Hope mentioned before that currently we're a net investor. And while that's a good thing, it doesn't look like we're going to be a net investor for a lot longer. My issue is that whilst we're a net investor, that still doesn't negate the risk of interest rate rises. And I note in the report that Bancorp are still working on gap analysis, which we asked them to start working on in around June. Why is that taking so long? It's a relatively simple process.
And the last time that I met with Bancorp staff, they assured me that they were working on that, and I understand that they are to present in person at the September meeting of the Power Committee. So doubtlessly you'll hear more about that then.
Okay, so just on that, I would like it noted that I'm not particularly impressed with the tardiness of this. I don't think it should take that long. You know, we've already noted here that we've rolled commercial paper short term for a month, $4 million odd worth, whilst we wait for their strategic advice and updates. And secondly, we're looking at a Bancorp paper, a Treasury report that's attached to this, which was dated June. Since June, there have already been a further 2 OCR rises of 50 basis points each meeting. OCR has gone from 2% to 3% since the publication of that report. It is now out of date and of very little value.
Thank you, Simon. I have to agree. And Mr. Hope, have you got any comments to add?
Yeah, I think we have talked to Bancorp and have expanded the scope of the exercise a bit, because sort of becoming increasingly aware of the potential impact of the Three Waters. So I think and making sure that we're appropriately set up for the potential impact of the debt repayment into the Three Waters. But yeah, certainly it's probably a bit of our fault by blurring the two together rather than making it 2 separate assignments.
Can we not eat the elephant bite at a time rather than work out how to consume the whole thing? Because the council has a genuine exposure and risk here, and we don't have our head around it. We don't have our head around the magnitude of it. I'm sorry.
Yeah, no, I acknowledge that. And yes, we should have had 2 separate, basically got that as 2 separate pieces of advice rather than bundling them together.
Thank you.
That's all, Simon. You've got
Yeah,
your
I
answer.
think that'll do for now.
Do for the moment. Okay. Thank you for those questions. Very valued. Thank you. Anybody else? Yeah, Councillor Hopkins.
Thank you, Colin. And thank you, Simon. Look, I've got a couple of questions about the Bancorp report as well, the Treasury report. But if we can go just, and this is a relatively minor matter given what we just heard from Simon, but I'm just curious to know, I couldn't work out on page 14, and we get the cash and deposits figures, and the budget was 14, but it looks as though the balance in the BNZ was 3.5. I'm just curious to know, at the bottom of that page, we talked about interest earned on bank deposits amounted to 26,886, which demonstrates, if you look at the next page, how valuable and useful and helpful our lending has been, given the amounts we've earned from that. But we got 26,886 from our bank deposits rather than the 24,730 we budgeted. What was the total amount that delivered that 26? Was it? It can't have been the 14 million, can it?
Mr. Wells. Jim, take your thanks.
No, it wasn't 14 million. The amount that we are able to deposit with banks is determined by the rate at which we use our funds. And although we have generated more income this year than we budgeted, and much more than the previous year, we didn't have the sort of money available that would have generated large amounts. Our investments, our loans to external parties are by far and away a better source of revenue than the bank.
So So just supplementary to that, there is reference elsewhere to the fact that there's $1 million in a BNZ account. Would that generally be, would that be essentially what's paid as the 26th now?
Our investments with banks vary from nothing to 4 or 5 million, just depending on the part of the cycle that we're in. The reference to $1 million with the BNZ, I think you're referring to our Carl facility, the loan facility, which we can draw on. It's like an overdraft. But it costs us slightly less than an overdraft facility. So that's why we intend keeping that.
If I may, my question about the Bancorp Treasury report, it's not as strategic as Simon's, but it does address, or it does go to the same matter. I do note on that our rate of borrowing is still the lowest, or maybe the lowest, and certainly very low, 1.74 as mentioned later in the report. But if you look at page 4 of the Bancorp report and the margins between what LGFA lending are charging us and what the market would, what I do notice with regard to the more recent borrowings that we've undertaken is that the margin seems to be much closer. And I'm just wondering, is that a sign of what's going on, that LGFA's 4.7, 4.26 and so on, is that where the market's going? And does that suggest we should be more prudent, or we need to be a bit more careful in terms of how much we borrow from the LGFA, given that those bottom ones are 15th of April 27 and the 15th of May 28, there's very little difference between what they're charging, what we're paying them, and what the market would charge us.
I'm not sure.
In fact, what you're seeing there, Councillor Hopkins, is the rate that we have borrowed at compared to the rate that we could borrow today, or sorry, at the end of June from the LGFA.
That's what I mean.
So, yeah, so the margin's tightening up because those more recent borrowings are at rates that are much closer to today's rates. So what it demonstrates more is that we were very fortunate in the early stages of our dealings with the LGFA that we were able to borrow at such good rates. Going forward, we will be borrowing at 4.7, 4.8%. Yeah.
I mean, that's precisely my point. What you've said is what I was saying in a different way. The question for you and Paul and for us is, does the fact that the margin that what we're paying for the money we're borrowing from the LGFA is now much, much higher and also so close to the market? The original reason for going there was that money was enormously cheap relative to what we'd have to pay elsewhere. So the question I pose is, if what you've just said is true, i.e. the market and LGFA are essentially closing in terms of, the cost to us, does that suggest that we need to be a bit more careful about how much we borrow from the LGFA?
Well, I don't know that what you're saying is right, Jim, in terms of the market rates would have risen as well. That those differences there is purely what councils borrowed at the time and what it would be borrowing at today. Yes. But the market is then another step above that again. So, and I think Simon wants to add a comment on it. So, Simon, you can add some advice on that, please.
I just wanted to try and help maybe clarify it a little bit. Councillor Hopkins, when you look at the red numbers in that column, just assume that is market. Don't assume that it's LGFA or in there. Just assume that that's the market rates. And the difference between the black numbers and the red numbers are because of a market shift, not because LGFA has decided that they want to pump their rates up or they need to make more. The LGFA is still absolutely the cheapest source of funding for the council. If the council went out to the banks or the market, those red numbers would be even higher. So what that table is showing is not that the LGFA has upped their margins and is trying to make more money off us. It's showing that since we signed up to our mortgage, rates have gone up.
Yeah, look, sorry if I'm obtuse, I apologise. But when I look at the figures at the bottom, we are paying 4.7% interest for this, the 2 million to be repaid in April 27, and 4.26 for the million to be repaid in May 28. That's more money than we're getting from some of our loans.
No, we're
Yes, it
not,
is.
we're not, Jim. The first one we're paying interest at 4.17 is what we're, council, the figure in black.
Yes. Oh, sorry. Did I
You-
say?
you-
I
you
think I
quoted
said 4.27. Sorry,
4.79.
forgive me.
Yeah.
But my fundamental question is, Simon, I get what Simon's, I understand that, Simon. I understand that the LGFA's cost of accessing money has gone up as well. My question is, if we're going to have to keep paying anyone for more, north of 4% on borrowing, should that impose upon us an additional responsibility to be prudent and very careful about how much we borrow? That's the fundamental question. We
Oh,
are
okay.
paying more to get this money.
I can assure you that we would not be borrowing unless we needed to borrow. It's for reasons that have been outlined earlier in the report and in this discussion. And we don't just borrow to invest, because that's a very good way to lose money, especially if you put it into the bank. All of our loans to external parties, apart from NOIC, are at rates that are in excess of these numbers. And the rates are at the bottom of probably about page 15 of the report, of the Treasury report. And the NOIC one is where Mr. Neil has pointed out that we do have a gap, and that's the issue that we have Bancorp looking at the moment.
Thank you, Mr. Wells. Mayor Kircher?
Yeah, just responding to Councillor Hopkins. I mean, it is something that when we make decisions, we need to take into account that cheap interest rates will not last forever. And I think that's been said many, many times as we've made decisions. And I think if anyone can predict what interest rates would be, they probably wouldn't be sitting around this table. They'd be making a fortune somewhere else. But the staff, I think, alert us to the concerns along the way and what the risks are. It's we need to be mindful of that. The staff aren't setting the interest rates. They have to take what they're given and negotiate as much as they can. But it still comes back. It's incumbent on us to make sure we're making good decisions and prioritising what we're spending money on.
Yeah, I think just following up on that, if you look at the chart, some of the longer term borrowing, the borrowings there for 24, 25, council's paying 0.65%, and the current rate would have been 4.54. So there's still some very cheap loans there. And I'm not sure which page it is, but one page, Bancorp actually again state, at the bottom of page 27, as of 30th of June, WDC's cost of funds was 1.74%, up from 1.48 at the end of March. So despite the increase, WDC's cost of funds remains one of the very lowest, if not the lowest, in the local authority sector that Bancorp Treasury is aware of. So there's highs and lows on the way through, but the average overall is 1.74%. So it's very cheap borrowing. And as Mr. Neil has said, it's the lowest cost money that council can access. But but there are some borrowings there, as I said, that are longer term, and that rate is locked in for that term. So, and hopefully, I think the economists are predicting that the inflation will tail off in a year or two, and rates will come down again. So, by that time, some of these may be due to be renewed at a lower rate. Time will tell. Right. Any further questions? Anybody on the? Oh, yeah. No. On the report for the financial report. Well, if there's no further questions, is anybody prepared to move the recommendation that the council the committee receives and notes the information? Councillor Holding. Mayor Kircher, thank you. All in favour, please say aye. Against? Declare that carried. Right, now we have to we're moving to the public excluded section. So someone would like to move that we go to public excluded. Councillor Kingham, Councillor Halalani, thank you. All in favour, please say aye. Against? Declare that carried. So we'll just take a pause while we go on to the end our live stream. So thank you for your attendance or your interest, those people out there in the big wide world. And we will renew